Hello everyone, today we are going to review the Q2 financial result of SOFI, and then we are going to see how to estimate the fair value of the stock. Q2 is a great quarter for SOFI, a lot of records. The net revenue up 37% year over year, new member is 584,000, up 44%. In net deposit 2.7 billion and up 26% quarter over quarter. And from the presentation of SOFI, we see that the members' growth trend is very beautiful. In 2 years before, Q2 2021 is only 2.6 million and now it's 6.2 million. And we see the products. The total is 9.4 million. Year over year is a 43% growth. And the product is kind of like 1.5 times of total members, which means that SOFI bring a lot from the cross sale. And the Gallerio account looks not that good. 129 million is quite flat in last several quarters. But there are some good news for Q4. And lending and financial service products looks quite good, especially for the financial service. We see 2.9 million products. That is also why we will see that the financial service net revenue grow more than 200%. And here we can see the breakdown of different segments. For the lending segment, we see that the personal loan origination is about 3.7 billion. In 1 year before, it's only 2.5 billion. In the student loan, it's kind of a little decrease, 395 million. In 1 year before, it's 399 million. The home loan, it's not good comparing with the 1 year before, but we see almost triple compared with the Q1, so that is a good sign. So in general, based on the financial number, the quarter result is very good. And there are some important items we can go through. That the share-based compensation, we see that the Q2 2023, the cost is 76 million and it's a little decrease compared with 1 year before. That is a good news because we see revenue grow very well and they don't need to dilute their shares. And also we know that in Q2 they acquired the Wyndham capital, and they mentioned that Wyndham will be a good match to the SOFI technology because it's also a fintech mortgage lenders. And they also mentioned that the purchase consideration is being allocated to the tangible and intangible assets. And the assets of the total purchase consideration over the fair value that will be allocated to goodwill. Now let us take a look how much they pay for that. In the Q2 result, in the cash flow from investing activities, they mentioned that 72.3 million related to business combinations that are cash acquired, also include the acquisition of Wyndham in settlement or some other stuff. So the payment for Wyndham capital would be less than 72.3 million. And from the Q2 result, if we look at the goodwill, we see that the goodwill increased about 18 million. So goodwill is kind of like they pay a premium to the lend them capital, but 18 million, I think it's a very small amount. So in general, I think the money they spend is quite reasonable. It's a small acquisition, but it can bring a lot of new business for SOFI. In the conference call, CEO Anthony Noto also talked about the SOFI Relate. So the Relate product is something we don't talk about that frequently because it doesn't direct drive revenue, but it's also a big contributor to cross-buy and a huge contributor on the data side. So kind of that for Anthony Noto himself, he took kind of all of his account, like credit card, saving account, checking, all other stuff connected. In that way, you can review your financial result easily, and that can also drive favorable budgetary decisions behind that. And I think all of this is try to keep your members happy and help the members to make their money right, and then they can help SOFI to grow to make better bottom line in the long term. And they're also talking about the IPO, kind of like in the Q2. There's a small IPO, it's ODT IPO, and with the IPO, SOFI can better serve the members, and the member they can acquire those IPO at IPO's price. In that case, so I can grow the AUM and also gain some fee from the IPO distribution. And for the deposit, Q2 that increased by 2.7 billion. And I think the important part is that more than 90% of those deposits are from direct deposit members, in which case that SOFI quite possible is going to get new deposit from these members going forward for a very long term. For the SOFI technology, the quarter will need that 13% quarter over quarter. That's not that good. But importantly, we expect the year-over-year growth rate in technology revenue to accelerate by Q4 with an increased contribution from new partners to the platform. So we may see a very good result for technology sector in Q4. Yeah, I'm very excited about that. And Noto also talking about the high margin of the financial services in the technology. So we get a lot of operating leverage in these two segments, and it allows us to drive more to bottom line because they are high incremental margin businesses. So regarding that, actually we can look at some of the real number. That for the finance, we see that the Q2 revenue is 98 million, and one year before is 30 million. So year over year increase 68 million, and the contribution profit it increased that 49 million. We can see that we have a 73% incremental margin. That is great. The number for technology is not that good because year over year only that 4% increase, and we see that the contribution profit went down a little. But I believe that's because that if you cannot grow the incremental margin, is not that reasonable. And if they can grow their revenue that double this number, I believe we are going to see a very good incremental margins. And actually, we can also see that even for the lending part, the incremental margin is that 56%. That's very nice. If they can grow their loan book, we are going to see that kind of that they will make a lot more money. And here we can take a look at the net interest margin. We see that the total interest earning asset, this one is Q1 2022 is 5.44, and now Q2 2023 is 9.26 due to the increase of interest rate, and the cost of their liability is about 4.26. So we see a net interest margin 5.74. Year over year increase about 50 basis point, and that is amazing consider the tough economic environment. But I don't think this number can grow a lot from here because you cannot charge your member too much. I think it's a kind of like a reasonable net interest margin. And here is the default rate. We see that for the personal loan, the default rate is about 4.6%. Student loan is 0.5. Home loan is 0.1. So far do have very high quality customers. And here are some net interest margin from different borrower. We see for personal loan, the average coupon is 13.6%, and consider the default rate 4.6. We have kind of like a low 9%, and we see that the cost or the fund is about 4.5%. So we can see that for personal loan there is a very good net interest margin, and for student loan, if we consider that the discount rate 4.4, and this one 5% of coupon minus 50 basis point, you only have 4.5%. So at this market environment, you cannot make much money from student loan. But think about that in 1 year or 2 years, if the Fed decrease the interest rate, I believe SOFI can make a lot of profit from student loan business. Okay, now let's take a look what's the fair value of SOFI technology. We made some assumption, and we want to see that what the fair value would be in 5 years, not tomorrow, not next year. I tend to invest in stock. It's important to look long term, 3 years, 5 years, because in the short term, you never know what will happen. But if you look at long term, there are a lot of things can be more certain, and it can help you to make good decision. So we assume SOFI is going to have about 20 million members, and each member they can have about $8,000 deposit in SOFI. Let us take a look at why I think 20 million member is reasonable. At the moment, they have about 6.2 million members, and if we look at kind of that 2 years before, they only have about 2.6 million. So they are more than double comparing to 2 years before. And if after 2 years they can double again, that will more than that 10 million. And so here we assume that quarter by quarter, SOFI is going to acquire new member going to grow that 2%, just 2% with this rate. After 5 years, SOFI is going to have more than 20 million members in total. And regarding the deposit per member, we see that in last several quarters that grow a lot. Comparing with the 1 years before, the deposit per member almost triple to 1,800, and we assume that quarter by quarter you will grow that 8%. Think about how much we grow. So this assumption I think is conservative. So after 5 years, deposit per member can grow to that 8,700. Let us just take 8,000. So with that, we are going to have about 160 billion deposit from the member, and we assume that at that time SOFI is going to have business with the government, with the corporates, and we assume they are going to have 48 billion from these clients, which I just said that 30% of the deposit from the individual members. So the total will be more than 200 billion deposit. What would be the fair value for the SoFi Bank with a 200 billion deposit? We assume that the deposit can contribute that 1.2% to the bottom line. That would be about 2.5 billion. And we assign 15 PE to the profit. That will give us about 37 billion. I think 15 times PE is reasonable. Consider that SoFi is high efficient and the operating cost will be lower than other traditional bank. They don't have any branches, and I believe SoFi has a very good ecosystem to keep the customer with their spending with the SoFi. So 15 times PE looks a little high comparing with the current traditional bank, but I think that could be reasonable for a long term, because at that time I think quite possible SoFi can still grow at 2-digit rate, maybe the 10%, 12%. And for the SoFi Invest, we assume 40% of the member they have SoFi Invest account, considering SoFi's ability to cross-sell their product. So SoFi can have about 8 million SoFi Invest account, and if we refer the valuation to the IB, also a public company, IB has a market cap about 36 billion. IB had that 2.4 million accounts. SoFi could have 8 million after 5 years, but to be conservative, we said that SoFi's market cap would be about 60% of IB, so that would be about 22 billion. In the other way, we can assume that SoFi's revenue can grow that 15% quarter by quarter. So in that case, we are going to see that SoFi can grow their revenue from current 98 million to about 1.6 billion after 5 years. And with a 1.6 billion net revenue per quarter, what will be the fair value for this business? Okay, here we can take some conservative discount. We say, okay, their revenue only 1.1 billion after 5 years, and 1 year will be 4.4 billion, and with a PS ratio of 5, we are going to see about 22 billion fair value for SoFi Invest. And for the technology segment, we just give it that 5 billion market cap. I think it should be much more than that, but we haven't seen kind of that the deliver from the management team about the technology segment. Yeah, we can see what will happen in Q4, whether SoFi can have some good partner and to bring new members, new revenue. But with these 3 sectors, we are going to see SoFi's total valuation be 64 billion. And for the share outstanding, now it's about 936 million. We assume that it will be diluted to about 1.2 billion, considering the convertible bond and also the share-based compensation. And so I may have new acquisition in the meantime. So with 1.2 billion share outstanding, the stock price would be about $53. and now the stop price just $9, so 5 times will be 45. So I think it's a reasonable estimation that SOFI can be 5 times in 5 years. But what will happen in 5 years, it's uncertain. So this is just an estimation, and I'm not a financial advisor. So please do your own due diligence before you make decision to invest. Thank you. Bye.